Thanks, Tim, and good afternoon, everyone. I might ask if we can roll forward 2 slides, please. As Tim described, Imdex positions itself as a mining tech company. We often make the point or the distinction between mining tech and the broader mining services arena. Imdex, by its business model and design, tends to be capital light compared to mining services, people light compared to mining services. And because of our global position, we have lower geographic risk and commodity risk and contract risk and the like, which is really a high quality feature of the business model overall. If we could roll forward to the financial highlights, please. So we've just completed our half-year result, and there's a couple of key things I'd like to draw to the attention of our guests. First of all, the 18% revenue growth has set a new record high for the company in H1. And pleasingly, because of the business model, we've got a 22% normalised EBITDA growth, and that highlights the incremental leverage that the business can achieve with its capital light and people light model, so that every dollar of revenue we add has strong drop through capability. And I'll touch on that a little bit more and why we think that's a key investment feature of the business in the slides that come. In addition to that incremental margin drop through, the business has been very clear about increasing its funding towards a number of strategic initiatives that position it for the future, namely the standing up of the mining production market-facing business unit, plus investing in our digital transformation program of work, which should lower our overall cost to serve, and in accelerating some of the software development, which all in all is just over $10 million worth of costs that we're absorbing in the business along the way. And so to make that investment in future-proofing the business and still give increased margins and incremental margins back to shareholders, I think is a really strong feature. Finally, on the bottom right-hand side, interim dividend of 1.5 cents, very consistent with what is our full-year objective of 30% payout ratio. Rolling forward 1 slide, please. Operationally, of course, there are no financial highlights without the operational delivery in the business. I'll draw your attention down to two things. One is on the bottom left, our people and leadership. We spend a lot of time investing in the culture of our people. We aim to attract the best and brightest people to our organisation. We welcomed recently a new non-executive director. Uwe is based in Seattle with Microsoft as their Chief Commercial Officer, looking after the resources sector, and his knowledge and experience is already adding influence onto the board, and the executive team is taking advantage of that knowledge. And in addition to that, Wayne Panther has recently joined as our CIO. Given the technology nature of the business, the enterprise elements that we seek to scale up, Wayne's experience in both Chevron and Microsoft are already being proven invaluable. To the right-hand side, and we'll touch on our investments a little later, but we've obviously made good progress in the half with 2 investments being Crux and Devico, and I'll touch on those a little bit later. Can we roll forward 2 slides, please? The revenue growth of 18.4% that you can see in the 3rd column of the slide in front of you is as compared to the full-time employees of 15.9% growth. I will just make the point that only half of those FTEs supported that revenue growth. The other half of the FTEs supported those new initiatives we've been investing in. Once again, highlighting the leverage and the ability to future-proof the business through those investments. Forward 1 slide, please. Imdex has enjoyed a very strong period of both revenue growth, EBITDA growth, and margin growth. We make the point that our revenue growth should outperform market. And to the left-hand side, you can see that our 13% 5-year CAGR compares to overall exploration expend in the industry, which we measure through the S&P numbers, which is closer to 9%. And again, that's an attractive feature of our ability to continue to grow the business in all market conditions. Rolling forward, please. Increasingly, our business is gaining exposure through tools which provide higher quality margins. And on the left-hand side here, I'll simply show that over the last 5 years, what we've done is take our technology that is hardware driven, the hardware element of our intellectual property, and we've been connecting it to our Imdex Hub IQ cloud-based platform. And the percentage of revenue that is now tolling through that cloud-based platform has gone from 8% to 32%. And we are progressively making that 32% higher as we either build more tools that are connectable or connecting more existing tools and getting customers' workflows more embedded inside that cloud platform. That's a very attractive feature. Customers that work through our cloud platform tend to be longer in duration and tend to have higher average revenues. Rolling forward, please. Sorry, rolling forward one more again. The balance sheet of the business remains very strong. We've always maintained a net cash position, but we've always felt we had the capacity to bring debt in and put our balance sheet to better work for shareholders. And the Devico acquisition that I'll elaborate on seeks to do exactly that. Rolling forward to the around the grounds. In our industry, we place close attention to the trends in the exploration and mining practices or trends around the world. And you can see here that whilst in FY22 we saw really outstanding growth in the Americas, we're now starting to see the flow of funds into the Asia Pac region and the African region, which has been long overdue and is the final recovery from COVID, if you like. Pleasingly, as we go into the second half, that flow of funds continues to be high. And so that 1H strength that you can see is expected to be retained as we go into this second half. Rolling forward, please. We look very closely at the industry fundamentals, and there's a number of different ways you can look at it. Financings in December and January have picked up. That's in addition to how we actually see budgets being allocated by the majors and intermediates who are not dependent on capital raisings, but simply have enough cash flow generation as producers to fund their growth. Rolling forward to the growth opportunities, please. Our strategy has always been fairly clear. We are heavily weighted today in the bottom left-hand side of that strategy quadrant in front of you. We develop products in that exploration and development side of the business. However, we have core competencies that allow us to push downstream into the mining production phase, which tends to be less cyclical. In addition, we can add new products either through R&D or through acquisition, which are those two top boxes that, as they start to become commercial, then come down to become part of our core business. And so we seek to replace them, creating a perpetual pipeline of new technologies into our business. Rolling forward, 2 slides, please. In January 19, we announced that we'd reached an agreement to acquire Devico. Imdex is the #1 player in its space, and Devico is the #2 player. It's fairly rare that you have an opportunity to consolidate the #1 and 2 players in an industry. And beyond the strategically compelling fit that the two organizations bring, the team that is Devico has a really strong values-based and cultural fit. And so we've thoroughly enjoyed getting to know that team over the last few months. Rolling forward, please. That acquisition is a 100% acquisition for $324 million as an enterprise value. We expect that deal to close on the 28th of February. And we're very pleased that that is a full and fair valuation before consideration of any cost synergies or any revenue synergies. And most importantly, the Devico management team is coming across to join the Imdex team as we go. Rolling forward, please. I've spoken a little bit about the synergies, but I also made reference earlier to the funding. We raised $224 million through the equity markets. In addition to that, we've taken on a debt facility of $120 million, which is a conservative gearing ratio of 0.7, and again, puts our balance sheet to good work for our shareholders. And we look to see, we obviously have a very aggressive plan to pay that down as soon as we can. The acquisition will be cash EPS accretive in the first full year of ownership. Rolling forward, please. So what did we acquire? There's really 2 primary technologies. The first is the DeviGyro, which you can see in the center of the left-hand side. The second is the Devi drill, which is in the center of the right-hand side. Those two products account for the majority of the revenue around the world. But interestingly, as an R&D business like Imdex, they also have new products in the pipeline. And so their Devi Star and Devi drill products, which today account for zero revenue in their current business, and we've accounted for zero in the valuation of the business, but obviously present great opportunities for further growth. And so we're really pleased that those technologies now come into our portfolio. Rolling forward one slide, please. Around the grounds, the overlap of the complementary nature and the overlapping nature of our facilities is evident in this slide. The key highlight for us is the addition of their R&D facility in Trondheim, Norway. That gives us presence in the large Scandinavian mining region in the world where previously Imdex was underweight, and complements that team in that facility, complements our Californian and Australian facilities both. Rolling forward, please. The business has enjoyed a very strong financial growth. It's 61 million in revenue and 29 million in EBITDA. It enjoys margins that are either equivalent to Imdex or superior to, depending on the technologies that we've added. And so we're very excited to bring that into our business. I might roll forward to the Crux investment, if that's okay. Very simply, Crux is a smaller investment, and we announced that we've entered into an agreement to acquire a 40% stake. Crux is the leading drilling analytics software platform in the world, and it's the fastest growing platform in the mining space. It was born out of a team that did exactly the same thing with a group called Pason out of Calgary. Pason is listed on the TSX. It's a $1 billion organization, and it's the specialist drilling analytics provider in the oil and gas space. So a great DNA, once again, a great cultural fit, and perfectly complements our hub and data origination strategy. Rolling forward, if you will. I'll just go step forward to the focus areas and outlook, please. Obviously, for us, our core business needs to be business as usual, and that starts with protecting and developing our people. Key focus areas for H2 will be completing the Devico transaction and the Crux investment. And then we've announced initiatives around the development of our BlastDog technology, which moves us into the mining production space, and our Digital 2.0 program of work, which should reduce our cost to serve and bring digital efficiencies into the fluid engineering part of our core business. Both of those have significant paybacks for us and are a couple of year body of work, and represent really exciting opportunities for the business. And then to the last slide, if you will, and I'll hand back to you, Tim. But obviously the outlook for us has been very positive. The underlying fundamentals support a strong outlook, and Imdex is well positioned to benefit both through its technologies and the overall industry trends. Thanks, Tim.
Thanks, Paul. I find this a fascinating business. Now, you just announced your results, record revenues, margins, and EBITDA. How do you maintain momentum? Is it simply a matter of upselling clients into kind of new tools that are embedded within your platform, and is it through acquisitions as well?
Oh, look, it is a combination. I think what's immediately available right in front of us is that we have a portfolio of technologies that can either be deployed to the market as individual products or as an integrated solution. On average, we have less than 2 products in any given drill site, whereas when we sell it as a solution, we have the opportunity to make that 8, 10, or 12 products, with the significant growth in revenue that comes from a fully integrated solution. So if we did nothing else, if there was no acquisitions, if there was no further R&D, just us working closer with the customer to provide them a more integrated solution gives us really strong revenue growth opportunities. The M&A and the R&D that all follows in behind that is simply cherry on the top, Tim. So we see great potential in our core business itself.
Thanks, Paul. And one of the key drivers, of course, was the numbers coming out of America. Kind of what drove this geographic outperformance?
Yeah, there's a few things. I think most resource companies understand that as reserves diminish, they need to be replaced. Those need to be replaced typically at depth, or they're more complex ore bodies. And that speaks perfectly to Imdex's sweet spot in in finding more cost-effective and innovative ways to deploy technology to identify targets and prove up those ore body targets at depth. North America presents a great opportunity because of the complex nature of its geology. There's obviously an arbitrage that comes with the higher cost, the inflationary pressures that are happening in that market. So it's quite a few things pulling together, making that a perfect storm for us at this time.
And how do you see the commodity suite playing out in regards to the importance to Imdex? Is there a specific commodity exposure you see as critical to your future growth?
Yeah, look, our technologies aim to measure the entire ore body, not just a particular commodity. That makes us commodity agnostic. So in principle, we don't mind which commodity happens to be the flavor of the month. Having said that, we can certainly see that those battery metals, those critical metals, which are copper, cobalt, nickel, and lithium, which have historically accounted for about 35% of spend, are now accounting for about 65% of new projects. And so as those get momentum and as those reach a tipping point, which we firmly believe they are on a path to do, you'll see that overall spend into those areas start to take shape, and you'll see that additional weight in the total size of the market. For us, that's very exciting.
And you touched on your Devico acquisition. How big could these synergies be?
Yeah, we've been fairly careful to take a cautious approach to guiding the market around that, Tim. Look, obviously, it's right within our core. This is more of a growth investment, so there isn't surplus costs to be extracted out, but there are some natural synergies to be achieved. We think that the $2 million in cost synergies we've signaled towards the end of year one are conservative, which is our nature. We like to make sure that we do not overpromise, and we want our teams to come together culturally first. We know that when we get that right, the cost synergies and the revenue synergies will follow more organically. The revenue synergies probably represent the greater upside potential as you add yet more products into that total portfolio offering, giving our customers more choice.
And just finally, from an R&D perspective, are there any kind of emerging technologies that the company will focus on in particular?
Yeah, look, I think we've been fairly clear to state that our core competency is around the geoscience-led areas of better understanding ore bodies, the targets, and drilling to target. And so to the extent that there are technologies that continue to refine and give insight into that space, those are all regarded as on strategy. That's a fairly broad church, and I haven't really given you a straight answer there, Tim. Suffice to say, we think that there is still significant potential should those right opportunities come along.
And any major competitors while we finish up?
Yeah, look, the entire industry understands the value of ore body knowledge. It's a little bit the holy grail of our industry. So everybody is seeking to solve that problem in one way or another. So whether you're the Sandviks, Epirocs, or Oricas or Hexagon Minings of the world, or whether you're a much smaller, specialized niche, highly focused technology provider, competition exists in all of those areas, but all of them are further in the industry for good. Imdex is simply very well positioned to have such a comprehensive portfolio that is exclusively focused on this area.
Thanks, Paul. Fascinating company. We'll follow with interest. Have a nice weekend, and thanks for your time.
Thanks, Tim. Thanks to you and your guests.